Hello there. Welcome to Commodities. Happy Tuesday. Let's take a quick look at how the energy complex is doing right now. We have seen higher oil prices. That's interesting. Natural gas giving up some of its gains, but of course it has been pushed rapidly higher by the brutal winter weather south of the border. Partly fears it'll shut in production and also, of course, increased demand for heating. Oil higher, though, more geopolitical fears and, as well, suspicion that the bad weather south of the border will hurt U.S. production. Maybe we could put up a one-year chart for natural gas because always weather-driven in the short term anyway. And it has been surging over the past while. We've seen this movie before, of course, in Texas and other locations. Bad weather shuts in production. And we are going to be drilling into the outlook for oil and natural gas later on the show. We're also going to hear from an analyst who says that slower growth in Chinese oil consumption as EVs take over that market is likely to reduce China's role as a driver of the oil price. We'll have a look at the natural gas price later. Moving on, though, to the metals. Gold, of course, has been an incredible winner for investors. Up again into record territory. That's the April futures. We've also seen the spot gold price trading at record levels as well. Not quite 5,100 spot gold last time I checked, but certainly in record territory as well. And we're going to have lots more on gold. Here are some commodity-related stories we're bringing you from our newsroom. Canada and India have pledged to expand trade in oil and gas. This comes after a lengthy diplomatic chill between the two countries. You'll remember Ottawa accused New Delhi of involvement in the murder of a Sikh activist in this country. Canada will ship increased quantities of crude oil and liquefied natural gas to India, while in return, India will send more refined petroleum products to this country. The Energy Minister, Tim Hodgson, says the talks show that this country is committed to diversifying its trade partners. And let's have a look at shares in Aya Gold and Silver. They have been rising as so many other precious metals producers have. The Canadian miner outlined its 2026 production outlook. It does expect production of up to 6.8 million ounces of silver from its operations in Morocco, and it does plan to accelerate development of its Boumadine project. With an updated estimate expected in the second half. It also actually plans to list in the US later this year to broaden investor access. And shares in Algoma Steel are on the radar today. They're up 6%. The company has signed an outline agreement with the South Korean shipbuilder Hanwha Ocean involving potentially Canadian Navy submarines. The agreement is potentially worth over $300 million, but it's contingent on Hanwha winning a military contract for a new fleet of subs. If that deal is secured, Algoma is to develop a steel steam mill. The news comes as Algoma continues to deal with hefty U.S. tariffs on metals. USA rare earth stories rose this week. The company said that the U.S. Department of Commerce may take an equity stake, and altogether, USA rare earths may get well over $1 billion from the U.S. government. It's one of several deals by the Trump administration with U.S. rare earth companies. The idea here, of course, is reducing dependence for those crucial industrial minerals on China, and to strengthen what they're calling resource sovereignty. Let's get more from George Generikas, Managing Director and Senior Analyst at Canaccord Genuity. George, thanks very much indeed. Nothing is definitely signed yet, but give us the outline terms of this possible deal between Washington and USA Rare Earths, please.
So, look, this is the second deal the U.S. government has done, taking an equity stake in a company that promises to bring a full magnetic supply chain to the United States. To your point, we're trying our country to wean off Chinese supply. We estimate that the U.S. consumes around 50,000 tons of NdFeB, rare earth magnets per year. And so we're trying to fill that capacity. Right now, MP promises it's going to bring 10,000 tons to life. USA Rare Earths promising that it's going to also bring 10,000 tons to life. There are others trying to fill that void, but over time, we hope to have our own incumbent U.S. Rare earth magnetic supply capacity that will likely grow in terms of our demand over the next several years as well.
And apart from the equity stake, which I think could potentially bring the taxpayer up to 16% of USA Rare Earth, depending on warrants and stuff like that, there will be funding potentially north of $3 billion US.
That's right. I mean, it's going to take a few $1 billion not only to bring the magnet manufacturing facility to life, but there's also a deposit in Round Top, Texas, that has potential mining and refining capabilities for rare earth materials, including some of the heavies like dysprosium and terbium, also commodities like yttrium, where supply is basically right now being cornered by the Chinese.
So the plan is to build a big processing plant in Oklahoma. And of course, that's where a lot of the value comes in rare earths, potentially a mine in Texas. And then just remind us, they have a foothold in Europe as well, don't they?
Well, the company's been incredibly aggressive in terms of filling its strategic voids over the last, call it several months. They bought a company called Less Common Metals that has domiciled in Europe, announced recent expansion plans in France. So they're becoming a global Western powerhouse, not slowly, but quickly, but surely. Not only having done this acquisition, but also with the capital that you announced, they filled both strategic and financial voids very aggressively over the last several months.
And you would be a buyer of the stock. Your target $33.
Yes, I mean, we feel like the U.S. is on an inexorable path towards critical materials independence that should continue regardless of administration. And there are several critical materials, apparently most important of which are the rare earths, and the U.S. will continue to make hay in terms of bringing all this mining and refining back to the United States.
And you reckon that fears of a surplus of this stuff, if anybody's worried about that, are misplaced?
That's like worrying about the hangover before the party starts, a little bit. But we think there's a lot of work to do here, and we definitely feel like this is not a zero-sum game for now. It's we need a lot of help to bring back critical materials independence to the United States, and so deals like USA's deal yesterday are additive to other deals like MP.
One thing that this latest deal, though, doesn't incorporate price floors. I mean, the fear has been, the Chinese will just slash prices to try to drive newcomers out of the market. But they don't feature in the USA Rare Earth proposal?
That's a really good point. So the MP deal that the government signed had a price floor for NdPr of about $110. This one for USA Rare Earths does not have such a price floor. USA does not have any plans to mine and refine the light rare earths. They actually have plans for the heavies and for other critical materials. And according to the company, they think they don't need those kind of price floors because the prices are incredibly high. And there hasn't been a target, at least so far, by the Chinese to make those materials, the refining of those materials, uneconomic in the United States.
There are some conditions they have to satisfy before they get all this federal money, including raising $500 million US from other sources.
Yeah, those conditions don't feel incredibly onerous to us. You pointed to one of them, and there's an additional $500 million. I suspect that they're probably going to be a little bit judicious as to when they raise that additional capital, but we expect all those conditions to be met, over the next several months and quarters.
George, thank you very much indeed for joining us.
Thank you for having me.
George Gianarikas, Managing Director and Senior Analyst at Canaccord Genuity. Up next, oil prices rising today as the U.S. military build-up near Iran raises concerns about a potential disruption to global crude supply. We're going to be back in a moment. Price of oil higher today. There is a growing U.S. military presence near Iran, raising fears of conflict and a possible U.S. attack that would disrupt oil supplies from that country. We also have brutal U.S. weather U.S. weather, and of course that could cut production and is likely to increase demand for some uses of oil anyway. Let's get more from Pavel Molchanov, Senior Investment Strategist at Raymond James. Pavel, thank you very much indeed for joining us. Could you start off with the Iranian situation? What is your take there? I know it's very hard to read. It involves Mr. Trump's next decision.
Right, so Iran produces 3.5 million barrels a day, and half of that is exported. So the portion that's exported accounts for 1.7% of global oil supply. That is needle moving, but not game changing. So even if hypothetically that 1.7% of supply were to temporarily, go offline, that would not lead to $100 oil in and of itself. Now, let's remember the U.S. launched airstrikes against Iran last summer. And there were no disruptions to Iranian oil supply at that time. So even in a military confrontation, it's by no means guaranteed that Iranian production would be affected.
Turning to the brutal weather in parts of the United States, we do sometimes see a knee-jerk reaction in energy prices, but these things do tend to pass, don't they, weather-related events?
Well, the weather has an effect not on the oil market, but rather natural gas. Okay. And just yesterday, we saw natural gas prices, spiking to multi-year highs, precisely because of the intensity of the snowstorm. But today, as you're showing on the screen right now, natural gas prices are pulling back, because of course snowstorms are not forever, and the weather will become warmer. And indeed, the long-term trend, as we know, is for warmer winters and hotter summers, which makes the natural gas market less weather sensitive than it would have been 10 or 20 years ago anyway.
That's interesting. Natural gas has been globalized that way, or moving towards being a global market. Yeah. You're not looking for a massive rally in oil prices this year. I think your projection is that oil will be generally range bound, $55 US to $60.
Correct. Look, we touched on Iran as a risk factor. Certainly that can move prices kind of on a short-term basis. But longer term, what really matters is the fact that global demand is barely growing. It used to be that for decades, global oil demand would grow between 1 and 1.5% per year, except for things like the global financial crisis. Well, now we have global oil demand growing, more like 0.6, 0.7% per year. And by the end of this decade, it's probably going to be slower than that. Wow. And the number one reason why global demand is barely growing is China. Because in China last year, more than half of all auto sales were electric. That percentage, that's an astonishingly high percentage for a major economy. In the US, it's barely 10% of auto sales. So with China, the world's largest oil importer, moving to electrify its transportation sector, guess what? That means oil demand simply cannot grow at the rate that it used to.
What about other countries? India with 1 billion people, the huge economies of Asia, Vietnam, etc. Are they likely to see a similar phenomenon with EVs taking a big stake of the auto market?
Absolutely. It will follow kind of the same trajectory as China, except, delayed by some years, right? So in India, EV adoption is maybe 5 years behind where China is, for a variety of reasons. If it were not for countries like India and Vietnam, global oil demand would have no growth at all. So the fact that it's still growing a little bit is really driven by these emerging markets ex-China. But over a multi-year period, the electric mobility adoption curve is going to be even more of a headwind to global oil demand than it has been up until now.
I was in the Dominican Republic a while ago, and I was surprised there didn't seem to be that many electric bikes and scooters yet. I wonder, is that because local electricity supply is not that good? But I guess as electric nets get better around the world, people will lean towards EVs.
Well, look, certainly some countries have the infrastructure to move forward with electric mobility faster than others. I mean, China produces far more electricity than any other country. By the way, that electricity is largely coming from coal, so it's not particularly clean, to be clear, but it is reliable. So there is that. In the Caribbean, traditionally diesel has been used to generate power, which is expensive. Just as petroleum is expensive for the internal combustion engine. But I think we will see faster EV adoption in emerging markets other than China as time goes by. And by the way, in Europe, almost 1 out of 3 auto sales last year were electric.
Wow.
So, there are industrialized countries where EV adoption is also moving forward faster than it is in the U.S.
We'd better go. Pavel, thank you very much indeed. That was great. You gave us a lot of content there, a lot of new ideas. Pavel Molchanov, Senior Investment Strategist at Raymond James. Up next, we're going to check out the price of gold and get some gold picks. Gold blasting to new records this week. Our guest is watching gold mining stocks, which have been doing even better than bullion lately. We're joined by Martin Pradier, materials analyst at Veritas Investment. Martin, thank you very much indeed for joining us.
You're welcome.
You have a chart for us. You produced it earlier this month. I mean, it's so hard to keep up with gold right now, but it does show that mining stocks have been, or at least they did last year, outperform gold.
Yes. In the past, they didn't outperform gold. The last 2-3 years, as gold starts moving up faster, they are outperforming gold by quite a bit. And that is because they have leverage to the gold price. So usually, if gold price goes up 50%, the profits of these companies goes up like 100%.
That's amazing. It's funny. Well, are they still valued on the amount of gold they have in the ground, their reserves? That was a traditional way of valuing gold stocks.
Yeah, there are different ways to value a gold company. I prefer to look at them on EBITDA or on a PE multiple and what they have been trading in the past, because the gold in the ground also. Usually you buy on reserves, which is only part of the gold in the ground. There is also, measure indicated resources and stuff like that. So it's a little bit tricky that way too.
I think people have been caught by surprise by this gold rally. What's it like as an analyst? You're really tracking a moving target right now, aren't you, with the cash flow for these companies?
Yes, it's very difficult to predict where gold will end at the end of the year. I had moved my price targets recently, and gold prices have moved so fast that I'll probably have to move it again. I think what is easy to understand is why gold is increasing. I mean, is this geopolitical issues that we have with Mr. Trump? That is attacking the Federal Reserve chairman. So it's undermining the confidence in the U.S. dollar. He almost broke the NATO alliance. So there are things that we've never seen before. And the investors are taking notice. The central banks are very, have been buying gold a lot and getting out of U.S. Treasury bonds. And the U.S. government bond market is 15 times bigger than the gold market. So even if just a few of these investors move out,
Sure.
that can have a big impact in the gold price.
You have some ideas for us. Franco-Nevada, you do see that gigantic mine, First Quantum mine in Panama reopening, and that'll be great for Franco-Nevada if and when it happens.
I think it will. I mean, that's all the indications are. The government has talked about restarting. They really need that mine. The mine was about 5% of the GDP of Panama, and they cannot afford to have this mine closed for much longer.
And Barrick, I beg your pardon. Yeah, Barrick, that's another stock you think offers decent prospects to investors?
Yes, I think that the story with Barrick is that it's very likely that they will come to the market with basically an IPO of 4 million Nevada Mines and Pueblo Viejo, about 15-20% of that, they will keep it themselves. The rest will be in the market, and that will give us an idea of what is the value of the most valuable part of Barrick. And then they will also talk about how they're going to improve Nevada, because Nevada is a great asset, but the last five years have not been good. The cost has increased like 45%. The production has declined. So they have to come to the market and explain, what is the prospect. And with that, I think the whole Barrick will be valued higher.
Just want to very quickly, we've only got a minute left. RBC thinks that at present prices, silver is now 50% of the revenue for Wheaton Precious Metals. Are you attracted to WPM right now?
I am, yes. We upgraded WPM in November exactly because of that, because I saw silver price going up very fast. And I figure out that, with that silver price, UPM is the one that benefits the most of the stocks that I cover.
Sure.
So yes, the 50%, it depends on where you value the silver and the gold.
Sure.
But last year, silver had increased probably twice as fast than gold, or even more. So that ratio has been changing.
Martin, before we go, Veritas doesn't do investment banking, I know. I should ask you, though, do you or your family have any shares in Franco or Barrick?
No, of course not. I'm forbidden to have any.
Thank you very much. Always love hearing from you. Martin Pradier, materials analyst at Veritas. Thanks for watching Commodities. We've got the close coming up next.